It's been very rough, not just for the broader markets, but the frontline index also cracked in trade yesterday. The whole universe pretty much seems to be coming off. Yeah. But there could be some relief, hopefully, after such a big fall. A little bit of a dead cat bounce cannot be ruled out, I'd imagine, or I'd like to hope. For our viewers.
after a 12.5% crash from the peak and a 5% gash in small caps in a single day, it's easy to bet your last dollar that today will not be as bad. At least, yes, maybe.
As bad. So yesterday we were talking about how deep is the red, and fundamentally there is a fear factor which needs to dissipate, which I suppose will happen. The 15th March is an important date for many, many reasons, and this is what has led to some of the concern. IDs of March. So 15th March, Friday, becomes an important day. Will you see that uncertainty going in? There's a stress test. There's electoral bond data going to be out on that day.
There's tax harvesting.
Yeah, but 15th March specifically.
Yeah, March is painful.
Yeah, and March is painful on top of it. So
will
all
we
of
see
those
an
things.
ETH to Brutus?
Maybe. But maybe a recovery today, hopefully, like Samina said. Having said that, what we're going to try and do on the show today is try and give you as much information as possible to make the right decision, because frankly, this is not an opening that one can predict very easily. I don't think anyone in the market right now will come out and say this is exactly what's going to happen. Having said that, let's take a look at what global cues were indicating. It was a mixed kind of a bag as far as global cues are concerned. The mega cap tech rally seems to have paused, at least for a breath, and that's what's led to those mixed cues on Wall Street. NVIDIA kind of dragged down not just the NASDAQ, but the S&P 500 as well. Not a massive slide, 1.5%. But you saw an Apple and other counters like that showing bits of pain as well. The US 10-year is something that I would like to highlight, because those concerns over there on the kind of inflation data we saw. Remember, PPI will be out later today. That's the Producers Price Index, gives you a more wholesale kind of a picture. It's estimated to grow at 0.3% in Feb. It's the last big data set before the next Fed meet. Nothing is expected to happen in March in terms of rate cuts, but all of these data points then become important, and hence let's look at the 10-year, which has been sort of inching up by and by, so 4.19% on the 10-year as well. And that's on the back of inflation outlook. Crude is a bit of story. So crude had a jump, 84 to a barrel on the Brent, because since January this year, Ukrainian drones have been mounting attacks on Russian refineries. Now, wherein, we sort of kind of forget that war is still on. In this part of the world at least. But now the tactic seems to be to attack Russian refineries to hit their economy. That has been going on. And then you saw a bit of a pain as far as Brent is concerned. Asian markets are largely mixed. No clear cues from there either. So if you're thinking of a clear direction, say globally, that's not happening. Look at it. The Nikkei typically down right now because all of the data is pointing to a possible rate hike at this point. So quite contrary to what's happening around the world. So that's as far as Asian markets are concerned. But we should take some time to recap what happened yesterday, Samina. And the close was truly one which left the market wondering what is happening. And we at NDTV Profit had a whole host of experts coming in and saying that you might see trouble for some time.
You might feel trouble for some time. And they've talked about this, right? They've talked about this for months at a stretch, saying that the broader markets look expensive. It's time to rebalance your portfolio. In fact, I think every advisor worth his salt has actually gone out and told investors that while past performance has been very, very great for some of these broader market names, it is time to rebalance portfolios, and I think this is a great opportune moment for investors to actually go out and do that. Sure, the falls are very painful. The portfolios have cracked more than the benchmark has actually cracked. But if you put all of that in perspective, the falls that we've seen are not a patch or a drop on the kind of gains some of these stocks or sectors have seen from April 2023 in the last 1 year. So while it looks painful right now, let's not forget that investors, traders, bulls on the street have made jars and pocket full of money. So nothing to be really concerned about in that sense. If we talk about the returns more holistically, implied Nifty indicating to another flat morning. A dead cat bounce cannot be ruled out after a pretty rough last few days. But let's take you through what worried the markets over the last couple of days in terms of sentiment. Firstly, you've got margin calls from brokers. Now, those are also gone up. Remember, leverage trade was the big game for a lot of traders and bulls on the street, and a lot of that action was focused in the broader markets. But with liquidity concerns, with the fact that some of these counters have been declining so very sharply, brokerage calls have also gone up substantially. So you're tightening your wallet in that sense is what could have led to limited sort of trade on the street. Apart from that, the ED raid on Hawala operator Tibriwal has also spooked or freaked out a lot of those stock operators who operate in the broader markets. They, of course, a little more concerned, a little more cautious. These operators now pretty much gone into hiding as we see it on fears of ED raids on them too. Apart from that, it's also the March effect. Remember, in the last 23 years, 56% times, which is about out of 23 times, 13 times the markets have actually ended negative. Couple of reasons for that. It is the year end, so you want to clean up your books, take off any risky assets that you see. You've also got tax harvesting that happens. So those are a few factors that could have spooked the sentiment. Of course, and the SEBI did its job and did its job well of talking about froth in the markets. I think that one statement did what was required to be done. You know, all that talk by fund managers, FIIs, anchors, journalists couldn't do much.
So Samina, I think, and Niraj, you have to look at it this way, that SEBI chair has spoken about what she's already been doing. SEBI has already sort of told the mutual fund industry that look at the kind of build-up in small-cap funds. There's a stress test coming on March 15. So 3 key reasons with that at least I saw. And I want to start the first one by just playing out a small clip of exactly what SEBI chief Madhvi Puri Buch said. Let's just play that out to give you some perspective.
Small and mid caps. We've looked at the data. We've analyzed it in conjunction with the industry. Are there some companies and segments which are being re-rated today? And that's a good thing. So yes, that is also true. But are there others where the valuation parameters seem to be off the charts and not supported, by fundamentals at all? So it's not a one size fits all. It's there are pockets of re-rating, which is good. There are pockets of froth, which is not good.
So there are pockets of froth that are not good. That's the statement that the market seems to have held on to. And that has caused some concern. Couple that with all the regulatory action you've already seen, whether it's from an RBI or from a SEBI on a JM Financial, on an IIFL, before that a Paytm. So that's building a bit of concern. The other thing is the stress test. The stress test has indeed become a stress point. So if reason one is froth, SEBI chairman speaking of froth in the market, second reason would be the stress test, which will be on 15th March, Friday. Essentially, mutual funds have been asked to give details of how they would react if they had large-scale redemptions. Will they be ready? And, those parameters have been given by SEBI. They have to come up with their answers. So that could be one key reason. Remember, one mutual fund even stopped lump sum investments into small cap funds. Was that a signaling that the market saw, which is why the bigger crack in the broader markets? The third, I would say, is again 15th March. Electoral bonds reveal is a big factor, and you saw that in the kind of stocks that got hit the most. Of course, it's relative, but if you look at the top Nifty losers, it gives you a fairly clear picture. So government-run companies, those companies that have run up because of capex expenditures, did get hit. So on 15th of March, 5 p.m. is the deadline for the Election Commission to put out details of who bought electoral bonds for the last 4 years, and that may be causing some concern. Just a quick look at who sold and how much yesterday and who bought. And that fund flow data is interesting because you did have FII selling 4,500 crores and DIs buying yesterday about 9,000 crores. You can put that down fair bit to ITC, which was the one outlier.
I want to add a couple of fund managers even went out and bought stocks like HPCL and Oil India in yesterday's trade. Yeah. So while there was carnage, opportunistic investments were happening.
So then is it the retail investor that has lost out yesterday? Will they continue? Niraj is joining us to set up what you can expect today as well, isn't it, Niraj?
Yeah. So just one point on the fund flows as well yesterday. If you net out ITC, the actual FI sell number northwards of 15,000 crores. So it's a very large number, because you can safely argue that BAT, which sold out, is not the FI balancing out number, because that's a global promoter institution of sorts. So FIs which bought into ITC kind of negated that sell number, which was very, very large. So keep that in mind. However, what happened in trade yesterday, and because small caps are in focus, here's some data. The Nifty small cap 250 recorded the biggest 3-day decline since March 2020. So COVID lows. So that's the first interesting piece. Here's a stat. Only 13 stocks ended with gains of over 2% in trade. That's it. One of them was ITC. So net of ITC, only 12 stocks out of the whole universe had gains of more than 2%. That's the brutality of the fall in trade yesterday. And the small cap index is down 12.5% from highs, but it's not the largest fall in history. That is not to say that that is what the small cap index will do, but maybe just give you some sense of the peak to trough of what the small caps have done in the past, to just give you this perspective. So if you just look at what's happened in the past, Jan 2013 was a peak. The trough was August 2013. The decline was 51%. In 2016, 21%. 2019, Jan 18 to August 19, 41%. Jan to June 22, about 24%. I've removed COVID out here because obviously it was an anomaly. Thus far, we've had 12.5% fall. Can we do more? Maybe. Just very quick stats here again. The small cap funds, which is the total mutual funds, the AUM has increased from 13.9% to 23.7%. 13.9% in COVID lows to 23.7%. Q4 flows, however, into mid cap and small cap funds are now trending to average. They peaked up in 2023. They're now trending at close to average. This is from a Jefferies note. But the more interesting piece is the third one, that the small cap share in overall markets is currently just at 14%, not at the 18% which was there in 2018. So the AUM is high, the overall share of stocks in the overall market is low. Just imagine the kind of buying pressure that comes in on a smaller universe of stocks, because the AUM is just so large. And I think now that the fund flow is receding a bit, maybe that just adds to a bit of sanity. So small caps, clearly the pain points. Not to say that this is over, but yeah, a bounce could be anticipated. But as you said, 12.5%, way lower than the kind of falls that we've had in the past.
Yeah, so we shouldn't be getting nervous is what we are trying to tell our viewers. And also, I think, Niraj, it's so important to keep all this in perspective. Most investors have made tons of money, right? Sure, you're getting that last chip, and it's very difficult, and that's why it's tough to be a trader, because you've got to not just call entry, you also need to call an exit, which most traders get wrong more often than not. So if you're an investor, I'm sure you're not concerned. All you need to do is rebalance your portfolio, get in an opportunistic investment as and when that shows up. But I want to bring up another very interesting data point that I came across. 1/3 of listings that have happened in FY24 are actually trading below their listing price. And that is interesting, because remember, that market has been flourishing with massive inflow, not just in the last few months, but in the last 2 to 3 quarters. Just to give you a perspective on those numbers, data shows out of 73 companies that listed in the primary markets raised about 60,000 crores, 26 of them are trading below their listing price. Companies like Credo, Brand Marketing, EPAC Durables, and Muthoot Finance are down anywhere in the range of 36%, 32%, and 31%. So that's what's been happening with listings that have taken place this quarter. Talking about listings, yesterday you had JG Chemicals that listed. It was rough. I mean, they couldn't have picked a worse day to hit the markets, declined and went home with a loss of 16%. Today, a very sort of a listing that has taken up a lot of interest or attracted a lot of retail investment in that sense is Gopal Snacks. They're debuting the Khatia guys.
Yeah.
They might just get the better of it. They've luckily picked today instead of yesterday, but grey market is indicating a premium, so this one could be seeing a pretty decent listing. At least we can hope for it. But remember, there's a very, very big retail connect to this, so there will be lots of euphoria and excitement around this one. But I believe it's back to Niraj for today's setup.
Yeah, so now let's just breeze through. I mean, we've kind of established what's happened all through. Just very quickly, the trade setup, quant indicators are not favoring any sharp pullbacks. The only respite is that the Nifty PCR is at 0.65, and therefore that is a positive. Sorry, we missed out the number here, but 0.65 is the critical element, and that is a small positive. From the call and put option data, I'm looking at the put option data, 21,700 strike has the maximum OI, 76 lakh contracts, a key level to monitor. If indeed the markets were to unravel further, then that is the key support level. If that gets broken out or taken out, then some of the unwinding that could happen could actually add to more pressure. And of course, Tamanna spoke about crude, spikes in crude prices because of these attacks that Ukraine is doing on Russian facilities. And if the crude spikes gather for the steam, that could be a further sentiment negative. So that's the trade setup for the day. What about specific stocks, guys?
Yeah, there are a few handful of counters that we want to watch out for in today's day of trade. Let's start with what I have in terms of the top stocks that we are picking up on this morning. So you've got KEC International. Now this is a company you want to watch out for. They've bagged a pretty large order, 2,257 crores worth of order. The stock, like every other broader market counter, went home with a cut of 6%, but there could be some relief coming in on the stock on back of this order win. India IFL Finance, watch out for this one. The company has approved raising 1,500 crore rupees via the issue of shares and 500 crore rupees via NCDs on a private placement basis. Remember, with everything that's happening or going on with IFL Finance, things have turned rough and fundraising seems to be the only alternative for the company right now. So that's what they're looking at. The stock could see some relief on back of that. This is a smaller company, but worth a mention because they bagged a massive order. Indian Hume Pipe is what I'm talking about. They've bagged an order to the tune of 230 crores from the Telangana government. Small company, but mentioning because this order is 20% of their order book. So putting that in perspective, it's going to be a big move on the stock, largely because of this massive order that's come through. Execution is going to be anybody's guess, but for now, Indian Hume could be one big mover in trade today as well from the broader markets.
Yeah, so a couple of stocks that I wanted to pick out, and remember, this is a day where maybe stock-specific movements might not really be there, but fundamentally, at least these are companies which have something good going on for them. Tata Motors is one of them. It's, the news has gotten drowned in all of the market fall sort of atmosphere, but they have signed an agreement with the Tamil Nadu government to set up a new manufacturing plant. The MOU will see a 9,000 crore rupee investment over 5 years. And Tata Motors fundamentally is a stock which has been showing an upside time and again, even after all the news, the demerger news as well. So this is one that I would keep on my radar. Another very important announcement which took place yesterday was, remember the pain that EV players were feeling once FAME 2 had ended. There is another scheme now, a replacement scheme of sorts, which has been announced to promote the adoption of electric mobility. Will not really help four-wheelers or passenger vehicles, but for two-wheelers, three-wheelers, definitely it's important. It's called the Electric Mobility Promotion Scheme 2024. 500 crore rupees is the outlay, and it could be positive for a Bajaj, a TVS, a Hero Moto as well, maybe an Atul, Mahindra. Some of these companies may benefit. I wanted to pick AU Small Finance because it was maybe one of the relatively lesser hit stocks yesterday. Even to end 85 paisa up yesterday was not a small deal. And there's a Motilal Oswal note out today which maintains a buy on it with a 720 rupee target. It says ROA will be suppressed in the near term, but the diversification in their lending portfolio is being seen as a benefit. They estimate the loan CAGR to be 25% post-merger. So the merger news might be an up over there. In fact, private banks need relatively, everything is relative. Not half bad.
No, we heard
Kotak Mahindra.
We heard a buy call yesterday on the closing show on a private bank.
Yes, absolutely.
So, absolutely right. Exactly. Just very quickly, just watch out for metals, because amongst everything else that happened, there was some serious long unwinding that happened in Nalco, SAIL, Hindustan Copper, and Tata Steel actually saw some further short build-up as well yesterday. Most stocks did, but the kind of long unwinding that happened in some of the metal names, Nalco, SAIL, and Hindustan Copper in particular. So price action and the OI addition kind of tells you a story about what happened there. I think we missed the graphic here, but that's the first set of stocks which are interesting. HAL, the Defense Ministry has signed 2 contracts with a combined value of 8,000 crores. So watch out for HAL and watch out for Cyient. Amongst everything else, it's signed a multi-year services agreement with Airbus for cabin and cargo engineering. Watch out. Maybe, just maybe, Cyient could have a good day. If today is a bounce day, then expect HAL, Cyient, Dynamatic, and a bunch of others to show some good moves. So that's the set of stocks to monitor. But it's time to get in editor's cut going today. And Alex, who is you are the judge and the jury.
Yes.
Who are the 2 fighters?
The 2 fighters is the one that could have introduced himself but is walking towards the podium. It's a mano a mano. But then on days following the day that we saw yesterday, you're tempted to call a peak because there is so much selling that you'd be forgiven for thinking that everything that came to that point is a distant memory. So from that perspective, what we're trying to do is we're going to do both cases. The gentleman who just walked in with a red tie, I was going to suggest that they exchange ties, but Mr. Muralidhar Swaminathan is not wearing a tie. So I would have said wear a green tie, wear a red tie. Because
I chose not to wear a tie. I didn't want to paint it in a color.
He doesn't want to paint a color. But to give you a perspective and how I'm going to suggest doing this very quickly, Niraj, is that you're arguing for a bull case. It's not over yet. Murli is arguing against that we've hit the peak. Each of you make your strongest points first. If you've got a counter, you can come in on the counter as soon as the point is made. So since we're looking at the kind of cuts, and since Niraj might be in the minority, I'm going to start with him. Niraj, why are you saying it's not yet over?
So, as an investor, Alex, I would really worry if I was in the late stage of a valuation cycle and a late stage of the economic cycle. That's when bull markets typically peak. Are we at a late stage of a valuation cycle? You could argue yes. Are we at a late stage of an economic cycle? Overwhelmingly no, right? We are certainly not there. I mean, look at all the capex plans, etc. So that's sorted, right? Now, is India the oasis of growth? That's the question that you got to ask. High frequency data recently that has come in from various factors, including the HSBC flash PMI or the PMI data, is looking very strong economic growth. Petrol consumption, 4-wheeler growth, 2-wheeler growth, steady to higher in Jan, that is the latest data, versus all of 2023, by the way. So that's data for you. Non-food credit growth is at 20.4%, much higher than 2023 averages. And RBI projections of 7% GDP growth, again, revised higher. So that's the third point. And, we've been talking about this pain in the small and mid caps or the kind of rally that they had. Look at the earning projections that have come in the small and mid cap space for 2024, 2025. Free float PAT growth, by the way, I'm talking about Nifty mid cap 100. FY24 estimated 42%, FY25, yes, lower, but still a healthy 21%. Small cap 100, 33% for FY24, 23% for FY25. NSE 200, a wider bucket or a bigger market bucket, 31% FY24, 15% FY25. So the numbers are not wrong. Muralidhar Swaminathan, why are you countering my argument?
Do you have a counter to that?
Yes, I have some counterpoints. Agreed, all these noises are there. I'll call them noise because they are all projections and we have gone to the extreme. The most important point I would like to make is that I'm sticking my neck out. This is something we discussed day before yesterday, even before yesterday's crash. It's the end of the blind bull run. I'm saying end of the blind bull run because we were running blindly and we were pumping up the market. We as in the markets, not you and me.
With journalist salaries, we can't do anything.
See, beyond a point, you can't pump up. The balloon will burst, and it happened yesterday. That's the first side. The most important thing is, greed cannot last forever. There has been an element or a strong element of greed in every investment, every trade that has been made over the last 3 months.
Yes.
That's number one. So greed is out, but fear is not in. Let me be very clear.
Sentiment is kind of shifted, not entirely though.
Not entirely. The sentiment is shifting. Caution has come in. We as responsible journalists, we need to stop at some stage and take a look, and which is what we did, when we broke the first story about the stress test, which Sajid Mangat, my colleague, broke that story. The second point, what's the most important thing here? The small cap bubble has been pierced. There was a bubble, there was euphoria, we all know that. every small cap you would have touched would have gone up by 30, 40, 100, 150%. That bubble has been pierced. You can't blindly keep investing. Mutual funds know that. We all know that. That's the second point. I'm just setting the context.
Sure.
Now, the question is, will there be a bull run in the current financial year? Maybe, but it will be in small bouts. It will not be a continuous, blind, relentless bull run. That's the point I'm trying to make. So making money is not going to be easy this year. I'm sure you all are agreed on that point. Maybe you can make 8%, maybe you can make 10%. You can't make 20% the way you did in 2023. Now, why am I saying this? There has been a lot of high decibel noise around elections, around economy. These are lofty projections, and most of them have been priced in. Okay. You know, I think at least 90-95% of what we are projecting, whether it is 7% growth or whether it is the capex taking off, they are all mostly priced in. That's my first argument.
Outcome of the general election.
Outcome of the general election is the most important thing. See, somewhere mid-January, early Feb, when the Prime Minister, after the inauguration of the Mandir, it was very clear that the election campaign has started, and very clear that the Prime Minister knows that BJP is going to get, whether it's 350, 370 or 400, no surprises there. So that surprise element is gone. The surprise element on the negative side may not happen, most likely unlikely to happen. But what is left after this? There is absolutely no trigger for us to go further. So you need triggers. The triggers might be there. Maybe around the election time you might see one surge in the rally. After the results come, it could go by 100, 150, 200, whatever. So the targets we don't know. It could be 23,000, it could be 24,000, but from here to there, it could be short-lived. Sure. There might be a bounce, but that could be short-lived. You need to watch for that one. The other point I want to make is that broader, moving away from elections, after June, sometime in July, the budget will come. The roadmap for development, growth, all those things have been already kind of set. They are all set. So it's a question of action that we need to see, reforms we need to see, and earnings we need to see going forward. That is one. Now, what are the risks to the growth? See, the risks to the growth are there over the next 6 to 8 months. Number one, consumption expenditure is going to go up.
For the government?
No, not just for the government, even for the public.
Okay.
Because there will be more money in the hands of the public. One, because elections are coming. Two, PSU bank ad hoc salaries, wage arrears are being given. It will run into several thousand crores. Central government has paid DA. That is the second point. Inflation is going up. Inflation is not coming down because of all this.
Debatable, but okay.
Yeah, no, inflation is still going up. You can see on the ground. You know, there is no surplus. So inflation is going up. It is eating into your surplus disposable income. Now, therefore, the question of pivot. Pivot right now is in the pits, and interest rate cuts cannot happen in my book, at least for the next 6 months.
Okay.
If rate cuts are not going to happen,
has he revised his argument? He has, right? Very cleverly. Yesterday he was saying a different number.
No, I'm going to an extreme. If I go to the extreme, it will be at least a year.
Okay, fine.
I don't see that happening because the difference between the targeted rate and the current rate is still very wide. It will take, I'm being optimistic
fair point.
for 6 months, because after 6 months, your festival season begins.
Yeah.
It'll be even worse. So I'm not going to that extreme. There is an outside chance if supplies are maintained.
Sure. Okay, so I'll just counter. Sorry, if you have a point.
No,
more,
I
just want to bring in numbers here.
One more before you bring numbers.
Yeah.
So therefore, I'm saying forget rate cut for at least 6 months, which is the common narrative for all of us. If rate cuts are not there, pushing growth becomes tougher.
Agreed.
If growth becomes tougher, earnings delivery becomes even more tougher. The last and the most important point: over the last 3 months, the market has been telling me this story. There has been a rotational game. Today it's FMCG, tomorrow it is metals, the day after tomorrow pharma, and everything that is not run is running. For instance, I think even the flattest of the flat, SBI, Mahindra and Mahindra, they've all run up. So the market is telling me a story that the rotation game has happened, and it's not as if you see green every day on the Nifty or this thing. So therefore my argument is blind run is over.
Yeah. So let's allow Niraj to counter with a few points.
Yes.
No, so actually, I'll make this quick.
Yeah.
We are already 8:27. But why is this not the peak? That's my limited point, because I think there is further room to go. Look at history. Nifty 50 forward P is at 20 times, by the way.
Yeah.
So while you could argue that it's expensive. Historically, October 21 peak was much higher than
Yes.
that. Okay, so part one. That
It's close to 30, right?
Yeah, no. Nifty multiple wasn't 30; it was 24 times.
24.
But still,
Those are small caps were about 30.
Yeah, which they might still be.
Yeah.
Or maybe after the correction, they're at 28 or 27. What knows?
Possible.
Yeah, so that's part one. Corporate profitability to GDP ratio. That's a metric. 5.8% is still below the previous peak as well. Right. That's part two.
Sure.
Nifty earnings have grown at a CAGR of 21%. If you assume even 15% for the next 2 or 3 years, they make the valuations look a lot more reasonable than what they are right now.
Right.
And India tends to get a higher P multiple. Why? Because the ROEs are much better. So the corporate ROEs are currently at decadal highs. 15% ROEs. Show me a market across the emerging market pack which has got corporate ROEs at 15% and therefore enjoying the kind of multiples. And by the way, just the last point, even when we talk about multiples of India being high, etc., look at the PEG ratio, which is what people refer to in a high growth area, right? Look at the PEG ratios. China is cheap, but for a reason. India PEG is at 1.2 times, Korea 1.5, Mexico 2.78.
How do you describe that?
The price earnings to grow multiple, right? So India is not terribly expensive. 1.2 is fine for a country which is the only oasis of growth. So the only point that I'll rest is that yes, we've moved up quite a bit, but we are far away from when peaks are formed.
And
Maybe
also in the
more
fundamentals, balance sheets are significantly stronger than they have been in the past.
Yes.
Allows for leverage to be taken to fuel the next leg of growth, possibly.
All those things are priced in.
All those things are priced in. So, look, from my perspective, I don't want to call it. I want you to call it. Let us know what you think in the comment section. In fact, whether or not you bet that the bull run is nowhere close to getting over, the peak has not been hit, at least in the near term, or if you think Muralidhar Swaminathan is right in his statement that, in fact, all of that is priced in and the blind bull run is now over. Let us know. Do stay tuned. Lots more coming up before the start of trade, and this is NDTV Profit.
Welcome back to India Markets Open. Well, we start by taking a look at how things have fared yesterday in the futures and options markets. And it wasn't a very easy day to trade, because we saw the Nifty, make a little bit of loss through the course of the day, and in the last couple of hours, we saw that loss precipitate. So for now, what we're looking at is a 1.5% cut for the Nifty. The underlying is now, or rather close below the mark of 22,000. It's always a little bit of a concern when you close below a crucial psychological mark. And along with that, we saw just a little bit of an increase in open interest as far as the index futures are concerned, the 2% increase there. The Bank Nifty was holding on a relative outperformance, but a decline all the same. It just didn't fall as much as the rest of the markets. The Bank Nifty also came off around 0.6% with an open interest increase of around 1.3%. That also looks like a little bit of short play here. But the real question is, now that the banking expiry is behind us, how will banks react going into trade today? Considering the Nifty options, naturally, since we saw the Nifty come off, we also saw a lot more writing around calls. 22,200, 22,300 specifically in this case stands out. Those specific strike calls stand out because we saw an increase in the open interest for those respective calls, and also unwinding in those respective puts for those particular strikes since we saw the Nifty come off. Where does it leave us with their overall open interest distribution? Now, naturally, over the course of the last few days, we've seen more and more writing around the 22,500 call, and hence that has become the one with the maximum open interest. But if you just look at this side of the chart, right, you will have significant OI in the 22,300, 400, and 500 calls, which means that this particular range will provide with a substantial amount of resistance in today's day of trade. On the other side of the spectrum, as you can see, there hasn't been as much put writing, which also means that at the moment, traders are perhaps expecting a little bit more weakness on the Nifty in today's day of trade. Moving on to stocks, we are looking at HUL, Metropolis, Power Grid, MCX, all of them looking at declines and some shorts coming through, save for something like an ITC, of course, which was an exception yesterday. And in terms of stocks which saw unwinding, let's pull that up as well. So we saw longs unwinding in Nalco, MGL, SAIL, Interglobe Aviation, Tata Chemist. That's as far as your stocks are concerned. Just a very quick word on what's happened in the options market when it comes to the Sensex. Because of the fact that Sensex options market is not as liquid as what we've seen and what we have been used to on the NSE, there were a handful of strikes which in fact did see a substantial increase in their premiums, a momentary increase in premiums. Now, there was all sorts of conjecture whether or not this is a freak trade. It is more likely the case that because of the lack of liquidity, even a small change, change in volume could in fact lead to a very, very large rise in the option premiums. So it is most likely something which the lack of liquidity has led to, and which is why you saw that spike in a handful of your Sensex call options yesterday. This is something that a lot of traders need to be wary of, especially when you have such volatile times going in. It is a high probability that you may in fact get stuck into positions that you may not be easy to come out of, and hence traders should be wary of the liquidity, underlying liquidity conditions as well when it comes to that specific option market. But that said, let's put that aside and let's bring in an expert to see what they make of these current markets. Well, we have Soni Patnaik of GM Financial who's joining us on the show. Soni, good morning, and thank you so much for joining in. Let's start by taking a look at what you are making of the Nifty and the Bank Nifty, and how would you trade them?
Good morning, Agam. Thank you so much for having me on the show, and good morning to all the viewers as well. See, if we talk about Nifty, yesterday we saw it broke 22,200, which was a crucial level. There's some expectation of a trend reversal below that level. As of now, we did not see any fresh shorts getting added yesterday. It was more of a long unwinding in Nifty futures. Not to a lot. It's more like an indecisive as of now. We believe that 21,800 could be a near-term support. If 21,800 is getting held and defended, then Nifty can resume a short-term trading consolidation range somewhere between 21,800 to 22,100, 22,200 at best. However, this could be just for a short term. If you look at the monthly options chain for Nifty, it is indicating a broad range. It's somewhere between 21,000 to 23,000, because 21,000 put options, they've got the maximum open interest for the monthly option chain, and 23,000 call has the highest open interest. So it's quite a volatile month, and we believe that the volatility is yet to continue, maybe just for a few days of consolidation. But once it breaks beyond these ranges, either 21,800 or 22,200 again on the upside, then further trend can be determined. Speaking about Bank Nifty, I think Bank Nifty is quite the savior that can be for Nifty or the markets overall right now, provided it is able to take out a resistance of 47,800 to 48,000 on the upside. If that is happening, then Bank Nifty can lead towards 49,000. However, failing to do so, Bank Nifty can also test its lower support zones of 46,000. So as of now, it's right at the middle of point, and it's important to watch out for the levels for Bank Nifty. It could just as well be the savior the markets need for the series.
Right. In that case, Soni, are you playing for volatility? And in that case, if you are expecting increase in volatility, what kind of an option structure are you deploying on the benchmark?
The best would be to deploy a long strangle for Nifty and to play it with the monthly option expiry, the 28th March option expiry. It would be to buy 21,800 put option, simultaneously buy 22,200 call option. The combined premium that you would get out of this range is somewhere around 270 odd points. So you can deploy the 21,800 put option in the range of 100, 120, 22,200 call option in the range of 150, 170. You can keep a stop loss of 220 points on the combined premium, which is approximately risk of 50 points if we just look at it in that way. And, the target can be from 300 to 400 points at combined premium. So it's a target of 110 points. The rationale behind this long strangle is, like I just explained, the monthly option is indicating 21,000 to 23,000. So any one side move can get captured via this long strangle option. And, it's still a half of a month series left. So we can expect more volatility to come in even in the second half of the series.
Of course, and if you in fact do see a rise in your India Volatility Index, which also means that it's a reflection of the kind of premiums you in fact stand to make substantially more there as well, just by being long on that particular strangle as suggested by Soni. But Soni, moving on, I believe you also have another stock idea for us, another strategy there as well.
Yes, the stock idea strategy is in SBI Card. Yesterday, we've seen a good breakdown happening in SBI Card. In option chain, it was a breakdown below 700 level. Even on charts, it's exactly at 680. Any break below 680, you can see it testing lower levels of 660, 650 as well. So the strategy here is to sell SBI Card futures. You can sell it in the range of 685, 690, and simultaneously buy a 700 call option in the range of 7 to 8 rupees. This is called a protective call strategy. It's just to hedge your upside in case the stock does not break 680 and it can bounce. So it's just to hedge your positions. And the stop loss can be maintained of 710 and above. The target would be 660, 650.
Okay, Soni, we leave it at that. Thank you so much for joining us, taking us through your views, as well as helping us with a couple of structure ideas on the benchmark, as well as SBI cards. And with that, it's over to you, Samina.
That's the market, that's the texture, that's the F&O activity that we're tracking this morning. A quick check on implied Nifty before we move on to stocks in news and counters such as ITC that held their head quite high in trade yesterday. Implied Nifty is oscillating between gains and losses. It's going to be a flat start. The only hope is that we get a little bit of a dead cat bounce after trade settles in the early minutes of the session. But for now, the Nifty indicating to start of 22,083 is what it's likely to open at. One stock that stood out was ITC. It came in as a pretty big surprise for traders and investors as that marked its exit in a block deal partial exit. 5%, they reduced apart their stake from 29% in trade yesterday. Most cases you'd imagine the stock would correct, but this one was a rare one, where ITC actually went home with gains of 5% as the overhang of BAT is finally behind them. Mahima is joining us to tell us who was the ones who picked up this equity that BAT offloaded. Mahima, it was lapped up in the first few minutes, literally, when BAT came out and reduced their stake in ITC yesterday. And it was big institutions that came in.
Right, absolutely, Samina. So as you rightly mentioned, the supply overhang that we were expecting was clearly not there. So multiple buyers, well, to start with, Government of Singapore bought in around 0.73% of the stake. ICICI Prudential bought around 0.41% of stake. BofA Securities bought around 0.16% of stake. Society General bought around 0.14% again. Morgan Stanley bought around 0.12%. Citigroup bought the majority one, which was 1.73% of, it was around 0.13% stake, and other multiple buyers also picked up around 22 crore shares, around 1.78% of the equity. Now, the transaction took place at 400.25 per share. Now, the other major holders of ITC consist of tobacco manufacturers, which hold around 23.9%, LIC holds around 15%, UTI holds around 7.8%. The stock performance, well, as you rightly mentioned, the stock did touch an intraday high of 8.5%. The stock did witness a 11% downward trend YTD because of the announcement of BAT stake sale. And if we talk about the street view, well, analysts are bullish on the stock. Around 92% say buy, 5% say hold, and 3% say sell. And the average 12-month target price at present, as per the street view, is at 500 rupees. So this is what we have for ITC.
Right, ITC, remember, was an outlier in yesterday's market. Thank you for that, Mahima. And because of the timing of BAT's stake sale, the kind of enthusiasm it saw, it really was the stock of the morning yesterday and managed to still close about 4.5% up, even in a deeply pained market. But what's the outlook, not just for ITC, but largely the market? Shrikant Chauhan, Executive VP and Equity Research Head at Kotak Securities, with us today. We're also speaking with Pankaj Pandey, Research Head, ICICI Direct, this morning. Welcome to both of you, and very good morning on the India Market Open. Shrikant, I'm going to start with you. We want to know what levels you see today on the Nifty, Bank Nifty. Let's begin with that.
Yeah, good morning everyone. I think, the market has broken important level at 22,000 and it closed below the same. But if we go through with the broader market, then most of the indices fell from the highs and they have broken their important levels. Mid cap and small cap index, where there was good amount of activity in last few months, they have also broken their important supports and fell sharply from the highs. So one thing is very clear, that there is a broad-based weakness in the market, and in case if there is any pullback, then furthermore selling will come. That's the overall view. So 22,200 and 22,100 will act as major resistance for the market, which were previous important supports for the market. So in case if there is any pullback because of any reason, we should look for reducing some long positions. That's the clear view. But in case if there is any furthermore decline from current levels, which is very likely, then 21,800, 21,700 should act as major support in the near term. We can expect some bounce back because now the markets are turning oversold on intraday as well as daily charts. So close to 21,800, 700, we should look for adding some positions with a medium term view, not with a very short term view, because in the short term, the markets are going to remain highly volatile. For Bank Nifty, there also the weakness was there, but it was least corrected index as compared to other indices. So there we can expect weakness up to 46,500. And in case if we see any rebound in the market, then I think Bank Nifty should participate in this up move. So broadly, I think 47,500, 46,500 is the range for Bank Nifty, and for Nifty, 21,700 and 22,100.
Yeah. Shrikant, with trepidation, I'm asking you if you have any picks in the market today. Even as you yourself are saying, we'll see volatility, even if there is some pullback, but anything specific on your radar?
Yeah, I think one thing is very clear, that stocks which have not participated in the previous up move and currently which are available at important support levels, there I think we should look for taking some long bets because the markets are down. So ITC looks good in case if it falls to the levels of 410, 405. Lot of mutual funds have taken active interest in the stock. So 400 or 395 should act as major support for it. So that should be the final stop loss for any trader to take long position in ITC in this particular market where one can take contra call. Also, on the shorting side, Apollo Hospital looks weak because after falling to the extreme levels, now Apollo Hospital is forming some continuation formation, negative continuation formation. So from here, the stock can fall to the next important levels, which are very close to approximately 5,800, where it has support of 50-day simple moving average. So at current levels, Apollo Hospital looks shorting candidate with a target of 5,800, and we can keep stop loss at 6,100.
We also have with us Pankaj Pandey joining in with the fundamental view. Pankaj, in yesterday's fall, did you go out shopping? Were there any stocks that you went out and bought?
Hi, good morning. I think given the volatility what we have seen in the markets, I think it is better to sort of wait it out for some period of time. See, our sense is that when you look at specifically, say, mid caps and small caps, they've rallied about 35%, and we would want to believe that we are in a bull market. And typically, in a bull market, you get corrections of say 15, 17 odd percent. We are already we have already done about 13% kind of a correction in mid caps and small caps. And it's a fairly large universe of some 3,600 plus kind of stock. So our sense is that you will get opportunities there also. And I think in the near term, probably the large caps is what will sort of provide a lot more comfort. And our sense is that typically in the month of March, you see weakness, especially in election years. And after that, the market sort of recovers. And I think overall Nifty could deliver earnings of about 14, 15 odd percent. And something similar is the kind of a return what we would expect. So our sense is that we are closer to the bottom, possibly in the next few trading sessions. We should be seeing overall bottom both in large caps as well as mid caps. But near-term volatility for few sessions cannot be ruled out the way we have seen yesterday. So, but I think wherever we see weakness, be in terms of large caps, mid caps, or small caps, I think we'll be sort of recommending stocks there.
Pankaj, I think we've been hearing a lot of fund managers talk about how important it's been to rebalance your portfolio in the last few months. The trade, there were telling signs a few weeks ago when you were seeing the broader markets underperform the benchmark. And I think that's pretty much what's going to play out. Talking about the large cap space, one stock that got everyone's attention yesterday was ITC. With Bat's exit and brokerages turning very optimistic on the counter and the supply overhang behind it, did you buy ITC or would you look at buying ITC?
So typically, one should understand that whenever you see market volatility, all your safe havens like FMCG sort of do well, and ITC, one overhang in terms of supply of shares got addressed. And I think overall our sense is that FMCG as a pack is a good place to sort of hide, but FMCG as a pack is unlikely to sort of outperform Nifty if you have a slightly longish term view, because I think at this still point of time, most of the FMCG companies are still sort of sounding cautious or not very optimistic on the rural side, which is where the demand contribution is in the range of 30 to 40 odd percent. So that is a challenge while the margins are good. Even for ITC, the volumes have normalized on the cigarette side, and FMCG as a business is doing well. So relatively, obviously, it is a preferred pick within the FMCG as a space. But FMCG as a segment or as a sector outperforming Nifty, I think over the next 2-3 years looks unlikely to us.
Absolutely. So FMCG, I don't know if ITC will show some signs of life, but Godrej Consumer is one that you could put on your radar. City Note is pretty positive on it. All things considered, it remains as their top pick in the Indian consumer staples. We just wanted to put that market fall into perspective. And before we hit a very small break, just look at the data of the last 6 months on 5 indices that I've picked. And what you saw really the markets do. So we're looking at the Nifty, the Sensex, small cap, micro cap, as well as the mid-cap indices, and that's really the data that we're talking about. And if you look at it, you see that the slide relatively is not half bad. Nothing really to be so stressed about. So the Nifty, for example, has gained about 9.5% in the last 6 months. You saw a decline of 1.5% yesterday. And it's not a like-to-like comparison, but even for the PSE index, for example, 115% run up with a 9.5% drop. Small cap, the index per se has gone up 74%, dropped about 12.5% yesterday. So you've seen pain and may continue to see some more, but it's not perhaps right to say that the momentum has reversed. We're going to come back and speak with Pankaj and Shrikant on more of that, stock-specific technical analysis from Shrikant as well. But after this very short break, we'll be right back with the pre-open.
Welcome back. You're watching India Market Open. It's expected to be a flat start, but we cannot rule out a sharp, a dead cat bounce in the second half of trade today on back of a huge sell-off that the markets have seen over the last couple of days of trade. So some recovery cannot be ruled out, at least for now. Shrikant, a couple of big losers in trade yesterday, some of those defensive counters like HAL, Bharat Dynamics, sold off very sharply in trade. This morning, of course, there's news that HAL has bagged a couple of large orders too. On the charts, how does HAL look? Do you think this one could be played for a recovery today, intraday?
Yeah, good morning. I think, yesterday we saw sell-off in almost all the indices and all the sector. And the fall was like, according to the performance that we saw in all these mid-cap and small-cap companies. In defense as well as in Reliance, in railways also, we saw substantial gains. In fact, if we compare last 12 months data, then all these indices doubled from their previous lows. I'm going to say from the previous year. And maybe that's the reason we are seeing sharp sell-off in all these stocks. But for specifically for defense, I think yes, HL as well as Bharat Electronics should be on the watch list. No doubt that the long positions and whatever the leverage positions were there, they are unwinding. But the stock is very close to its important support levels of close to 2,900. In case if we see the stock is dropping to those levels, then there one can look for taking some contra bets. With a medium-term view, with a very short-term view, I think the markets and stocks are going to remain highly volatile. So in that case, keeping any stop loss is not advisable. So it is better to buy and buy with a medium-term view. I'm of the view that the way the stock has fallen from the highs, it is definitely going to rebound, but it will take some time. So 2,900, 2,850 is the zone to buy for.
Okay. Well, the pre-open rates on your screen and they'll be all over the place, maybe a mildly flattish start. But remember, Asia isn't the prettiest of pictures today. Crude slightly higher too. So in some sense, if it was just an ordinary day, not on the back of what happened yesterday, you would argue that there are chances of the market staying a bit sluggish. But let's wait and watch. We'll give these rates a chance to settle as well. We'll watch out for ITC, watch out for some of the banking names which are doing well, and then watch out for almost everything which didn't do well. Actually, metals, Shrikant, Niraj here, good morning. This kind of brutal sell-off that we saw in metals yesterday, the funda data is not great either, but just the long unwinding that we saw in a Nalco sale or short build-up in Tata Steel, while you may be of the view that there could, if there is a short bounce, would metals participate or metals largely stay subdued?
Yeah, I think so. Like whenever the market falls from the high, most of the time we see a specific sell-off in cyclicals, especially in commodities, because there traders get a lot of beta to capitalize in the fall. And this time the market was like overextended move. So in such type of markets, most of the time experts choose cyclicals to go short. I think from current levels also, we can see some correction. But at lower levels, I'm to say from here at 128, 125 levels and at 140 levels or at 135 levels, one cannot go short on Tata Steel. It is better to stay away from taking any short positions at current levels. But yes, in case if there is any rebound from higher from current levels, then certainly we should look for taking some contra bets of going short on Tata Steel as well as on Nalco, because both these stocks have fallen from their highs and the fall was clearly vertical. So close to 142, 143 levels, one should look for taking some short positions on Tata, on Nalco. And for Tata Steel, I think close to 148, 149 levels.
Okay. The other one, I was looking at the kind of news flow today. Pankaj, yesterday, one of the stocks that stood out was Tata Elxsi, was marginally in the green. Today, Cyient has signed a multi-year services agreement with Airbus for cabin and cargo engineering. So some positives are there for select IT names or ERD names, etc. Do you like the stories here? Maybe a Cyient or maybe some other?
I think, Niraj, overall, if you look at within the IT, see tier one, the challenge still lies in terms of slower dollar revenue growth. Probably it could pick up in FY26. I think the tier two as a space has been relatively a lot better in terms of a lower double-digit kind of a growth rate for some of these names. And I think our sense is that if we sort of get a decent correction here in these space or some of the pockets, and I think those companies can be looked at, because I think our overall sense is that while IT may not structurally sort of outperform, but you have triggers in place for the next 3 to 6 months. So in terms of one, US cutting rates and BFSI as a segment there, or the entire banking and financial services as a segment there, spending from them could sort of perk up, and that might have a positive rub-off on some of these IT companies. Because see, BFSI is one of the biggest spenders of IT in US, and so obviously it will have some bit of a positive rub-off. So probably low double-digit kind of a return is very much possible in some of these names. So we are actively looking at, and I think if there is extra weakness which we see in any of the tier two counters, I think those would be a good opportunity to buy. But I think beyond that, we still don't think that they can sort of structurally outperform markets going forward.
So Tata Elxsi having a decent morning. So is Adani Enterprises. If you just pull up, pre-open rates which are settling, you are not seeing signs of panic, at least, ensuing in the first 4 to 5 minutes of pre-open. That's all we can say. Nothing massively moving one way or the other, but the kind of panic and trigger happy play that we were seeing yesterday, post noon, seems to have stopped for now. We'll see what happens, of course, in a few minutes from now. In the interim, Harsh is joining us with a curated list of what the top brokerage notes this morning are. Yes, Harsh?
Well, yes. First, let me start off with Coal India on Jefferies. Very strong buy rating, 520 rupees is the target price they are ascribing. Basis for this, they believe a 13% decline already that the stock has seen is a decent enough correction and possibly an opportunity to buy at this point. What they are suggesting is e-auction premiums and prices have fallen now, and that piece is largely behind Coal India. And what they are therefore suggesting is improved volume growth is something that the company will focus on, along with cost efficiencies. And with that improved cost trajectory, EPS should start to go up. In fact, they're expecting the EPS to creep up to 51 rupees all the way through FY26, and they're expecting a stable number over there on that count. Currently at 45 rupees doesn't look like a screamer in terms of expectation. Also, at 10 times price to earnings, FY26 is what they are valuing the stock at. 6% dividend yield as well, so doesn't look too bad for Jefferies with that kind of a target price. Quickly moving on to Shriram Pistons, MK has initiated coverage on this one. 2450 is the target price, 70% upside. They believe that core product portfolio is extremely strong, and they believe that this is one play where the ICE engine play is continuing to be, because ICE engine investments have depleted globally, and that could be one opportunity where this one could take an advantage of. Currently trading at around 11 times earnings. They value it at 18 times FY26 earnings. 2450 is the target price, 70% upside.
Thank you for that, Harsh. There's a whole handful of stocks that are going to be in focus this morning. Shrikant, would you trade any of the Adani Group stocks for a bounce back today?
Yeah, I think so. Yesterday, all these stocks were down mainly because of some specific news flow and maybe rumor that active investor is selling his stake in Adani stocks. And that's the reason the stocks were down. But I think, in this particular space, we like Adani Ports, on which we have fundamental coverage also. It has fallen sharply from the highs. I think it will be an opportunity for positional traders to take some long positions. Close to this 1200 and 1210 levels, the stock is having excellent support. But in case if there is any further more weakness, then the stock can fall to the levels of maybe 1150, 1160. So between this 1200 to 1150, certainly we should look for adding some long positions with a positional point of view. And we can keep stop loss somewhere close to 1100. I'm expecting stock to rebound to the previous levels of 1400 very soon.
Okay. So that's the view on these stocks. And remember, almost everything economy linked had taken it in the chin. Pankaj, Jefferies is very constructive on Coal India. They view this as a buying opportunity. Do you? Why or why not?
So on Coal India, Niraj, our target price previously has been 500. We are very constructive on the stock. And I think, our sense is that we will see limited addition of coal thermal capacity going forward. And while company has been sort of ramping up their volumes, we are already seeing close to double-digit kind of a volume growth this year. And subsequently, our sense is that they'll be able to achieve 1,000 million ton kind of a volume going forward. And whatever weakness we are seeing in e-auction prices, I think is more of a temporary. And our sense is that going forward, that is one segment where the incremental profitability is going to be driven from. So we are quite constructive on Coal India, and I think any kind of a correction, even from current levels, should be a good buying opportunity. And I think dividend yield for the stock is also quite attractive. And in case if the company sort of ventures into coal gasification, I think that is where our sense is that possibly further more re-rating can happen, because up till now, a lot of these companies were viewed only from a very limited perspective. But if you get into coal gasification, possibly the emissions are a lot more lesser, and then the longevity of the business goes up.
Pankaj, tactically, give me 2 or 3 stocks that you would be buying right now, opportunistically, right? So fundamentally, anything that has been on your radar and with a recent correction that looks attractive to you.
So, for example, within large caps, we would be looking at weakness in SBI, L&T, NTPC looks very attractive to us. Coal India, I just highlighted. And I think even in mid caps and smaller caps, we are sort of quite constructive. So, for example, if you see further weakness in Exide Industries, that looks good to us. Or some of the construction companies, say, for example, NCC, we are quite positive on that stock. Should be a beneficiary if the interest rate sort of decline, or something like KRR Construction, because I think there's one stock which has not been sort of taking orders, and that was a sort of a concern, because their order book to bill ratio had gone down below 2 times. And if the company is winning orders, which is what it did recently, then I think the risk reward looks attractive to us. So, like I've been highlighting, you will get opportunities across segments.
You know, Pankaj, I just want to get your take on Tata Motors and some of the auto plays today, and whether you will see an opportunity there. The new EV scheme is something that could be positive, you think, over time for the two-wheeler pack, and Tata Motors, of course, with their new Karnataka plant in the news. Not too much action in opening trade or pre-open trade right now, but for the medium to long term, would you start looking at some of these auto majors?
So Tata Motors, our target price is 1,085. We've been liking this stock for quite some time. I think this announcement of capex of 9,000 odd crores, we still need to sort of figure out, because see, they already have sufficient capacity on the PV side. So they're doing a volume of somewhere about 5.5 lakhs, and they've got a capacity of 9 lakh. And CV, we all know, is at nearing its peak in terms of volumes. So we are still not sure for which segment they are sort of putting up capacity. But Tata Motors, overall, our sense is that is one of the best EV plays what one can look at. And good, interesting part is that when you look at whether their Nexon, which is the topmost selling model, I think their parity with IC is very much there, which is what we have seen post recent price cuts. So any kind of a weakness in Tata Motors, I think, looks good, looks very attractive, and should be an opportunity to buy.
Okay, bring up some of the pre-open rates, and let's see what ITC is up to at the end of the pre-open session today. Nifty is flat, which is maybe a welcome sign. ITC is flattish. ICICI Bank and maybe Axis, IndusInd, HDFC, the private banking lot was okay in the session yesterday, flattish again. And the losers, metal names, Adani Enterprises, everything economy linked, had taken it on the chin yesterday. Adani Enterprises is marginally in the green. Tata Steel, SAIL, Nalco, etc. should also come up. Almost all things are looking flat. The wind energy companies are not, by the way. So Shrikant Chauhan, for some of the names which had an outperformance yesterday, you had mentioned that banks are right there. This morning they are starting off flat. Would you initiate a long trade on open on any of the banking names now that you have seen the pre-open rates?
No, Niraj. I think it is better to stay away from taking position at the opening, because I'm of the view that some more liquidation can be possible after the opening of the market, because yesterday's sell-off is certainly going to invite further more margin calls at the opening. So we can see some more correction. I think close to 21,800 or 21,700, we should look for adding some positions. But at this level, certainly avoid. Yes, we like IndusInd Bank. We like ICICI Bank from the BFSI space. For the time being, stay away from State Bank because it is showing some weakness. The stock can fall to 730, 740. But IndusInd Bank looks really good to buy and hold.
IndusInd Bank is something Shrikant Chauhan likes. One quick call on any of the realty pack. Again, looking like it's going to have a bad day in the pre-open session at least. Shrikant, anything that you would pick up here or stay away?
Yeah, in this space, particularly we like Lodha, Macrotech developer, which is currently around 1010, and the stock is showing a lot of resilient sort of formation. Whenever there is a correction in the stock, it recovers back and it crosses its previous high. This time also the stock is sharply down from the highs of 1250 to almost 1050. It is now very close to its all important averages. I think close to 1000 levels or maybe 950. Certainly, we should look for adding these stocks with a medium term view.
Okay, well, 20 seconds left for the markets to kickstart trade. Gentlemen, stay on. We'll take in opening thoughts from you. Actually, Pankaj, we'll let you go on that note. Thank you so much for taking the time out and being with us on the show today. Really appreciate your time. Shrikant, we'll just take in the opening trade from you before we let you go. But 9 seconds left for the markets to kickstart trade. Expect a flattish start. Don't expect exuberance. The question is, what does it show within the first 1 hour? I think that is the key point to monitor. Bring up the open here. Well, about 35 odd points in the red, 54 now. So while it was a flattish start, it's quickly giving way, 1/3% in the red. The mid-cap banks are actually correcting a bit today. Interesting. Bring up the mid-caps and small caps and see if that pain continues. About 1% lower for mid-caps, small caps, maybe even more, maybe. No, about 1%. So no, it's not turned out to be a good start. Kind of mirroring Asia and maybe doing a bit more. Bring up the heat map and show what's moving and what's not. Well, Reliance is holding fort. Coal India, Jeffries top pick. Hindalco marginally in the green. And Kotak Bank is probably the only banking name out there because banks today are not faring well. Bajaj Finance, IndusInd Bank, I can see a couple of them in the top 10 losers in the NBFC space. HDFC Life is down about 1.5% as well. So NBFCs are correcting. Bajaj Auto down in trade. Well, clearly a bit of pain, though holding out right now, and that must be courtesy what's happening to Reliance and Infosys. Yep, I think those are the two which are helping the index stay afloat, but already stocks are showing some signs. Bajaj Finance is now quickly down to 2.5% lower. Not looking that great at the start. Let's see how it shapes up in the first 15 minutes to half an hour of trade.
I think we should also quickly look at what's happening on your mid-cap and small-cap indices because, like we saw yesterday, that's where the pain point actually is. So before we get to individual stocks, look at how quickly this has careened. About 200 points down right in the open on the mid-cap. The BSE small-cap also 1.5%. I just want to pull up the micro-cap as well if we can. The micro-cap on NSE is about 1% down. So you're going to see some pain points there. Let's look at specifics. Godrej Properties had some news flow this morning. I don't know if it's helped because the entire real estate index has also been down in opening, and we'll pull that up on your screens very quickly. They acquired 3 land parcels, not helped at all. I just want to see if you can pull up what Macrotech is doing as well, because it was one of the top losers on the Nifty reality, at least pre-open. With Godrej Properties not having a good morning, Cyient is the other one that we should look at because Cyient had an order coming in. There's Macrotech, 2.5% down. Cyient had a multi-year pact with Airbus. That's positive. Markets rewarded that, 2.5% up. Tata Motors' new plant in Karnataka, no real great reaction, but relatively in this market, definitely holding up. Coal India, something Niraj talked about. There's a Jeffries note, and one of, I think, the few spots of green that you're going to be seeing in the market today. Godrej Consumer was the other one that I wanted to see what's happening with that. There is a bullish note from Citi and down about 1%. Jet was an interesting trade that we saw even yesterday. Remember, volumes are very, very tiny on Jet, but it's consistently been about 5% up. We have a special story on NDTVProfit.com why that could be misleading if you're an investor. Tata Investments again down 5%, I think 4th consecutive trade. And Swan Energy I found interesting. After a bad beat for the last few sessions, obviously yesterday, that stock 6% up this morning is definitely interesting to watch out for. But in the broader market, Samina, the pain still continues.
It's still look good. Of course, the fall is not as bad as what we saw yesterday, but still struggling to find its feet or an interim bottom for now on the broader markets. A couple of stocks that have actually should be doing well on back of order wins is HAL. They've bagged an order worth 8,073 crores from the Defence Ministry, but the reaction is muted. On any other day on back of such news flow, that stock would have seen a move of 4-5% easy on the upside. But this morning, only a percent odd being added to HAL. Kalpataru Projects, they've also got an order worth 2,500 crores. Let's take a look at how that's doing. 4.5% up move on that. India Hume Pipes, if I can get that too up, they've bagged an order for 230 crores. But that, remember, is 20% of their order book. The stock is up 5%, so it's actually not doing too badly on that. KEC International, again, that was an order win story for KEC as well. Not a bad reaction. 1% high on KEC is what we have. Federal Bank, on back of what the regulator has said, they've been dismissed in terms of credit card their business. The stock is reacting badly to that. 5.5% off on Federal Bank. They cannot be issuing any more co-branded credit cards until the regulatory clearance comes through. On back of that, Federal Bank sees a cut of nearly 6%. Cyient was up 2.5%. They've signed a multi-year service agreement with Airbus for cabin and cargo engineering. The stock looks good, up 2.5%. India Pesticides is down 8%. Suzlon is seeing a cut of 3%. JB Chemicals is down another 2%. Inox Wind is seeing a cut of 5%. Equitas, Lemon Tree are all seeing cuts of 2.5% to 3% each. Tata Investment Corp is down 5%. Sterling and Wilson is seeing a cut of 5%. Chalet Hotels, so hospitality as a pack, including the likes of Chalet, Lemon Tree, are seeing losses of 4-5% each. Macro tech developers, which we talked about, Adani Power is off the day's low point, but sees a cut of 2.5%. Ipca Labs, Phoenix Mills are some of the other stocks that are seeing selling pressure this morning. On the gaining side, Adani Energy is seeing a recovery after yesterday's fall, up 3.5% to 4%. Adani Total is up over 3%. So these stocks started flat, but have actually picked up quite a bit of interest. Pull up Adani Enterprise as well while we're at it. It didn't start off too strongly, but after yesterday's fall, there is a bounce back that the whole bunch of Adani counters are seeing in early trade. Niraj, Tamanna, I know it doesn't look great, but I still feel like the good thing is that at least there are no double-digit cuts on any of the broader market stocks today. And it seems like there could be a little bit of stability showing up in the last couple of minutes.
And PSUs are kind of trying to make a bit of a comeback. Remember, yesterday the CPSE ETF was down about 5-6%. So a bit of a semblance of sanity there too.
I think financials are having a bad day today. Your PSBs, your private banks as well. It's not a great day for financials. If you pull up that index, you'll see that as well. Relatively, I'm seeing spots of green on some of those held segment plays, and Ipca Labs up about 3.5%, or Dr. Lal Path about 2% up this morning. So you have some spots there of color. But I think one key observation which Samina also made is the entire Adani pack has seen turnaround, whether it's energy, Total. We should pull up all of the stocks in that segment. Enterprise on the top of it muted, but the rest of them not doing too badly at all. Adani Green about 2% up. So are we going to see a sort of tempering of yesterday's fear factor? Just quick word from Shrikant Chauhan of what you're spotting right after open. Shrikant, any change in your play for today?
Yeah, I think we have to wait for at least next 1.5 hour of trading, because the market is trying to sustain above its previous low of 21,900, yesterday's lowest level. If we see the market is dropping below the same, then the sell-off can extend. Otherwise, we can see some correction in the maybe for next 10-15 minutes. So broadly, we are of the view that at current levels, it is better to stay away from taking any long positions. But yes, if there is any correction, then we should look for adding IndusInd Bank with a positional view. And at current levels, I think Bajaj Auto looks weak. It is falling from the highs. It has broken its important support level at 8300 levels. So from here, the stock can fall to the next levels of 8200 or 8100. So there we are seeing some weakness. In fact, I want to say all these auto companies are under pressure, and we can see further more weakness in auto stocks.
So further weakness in auto stocks is what Shrikant sees today. Just let's quickly pull up Gensol Engineering, because this has been, one counter. But if we are talking about one factor which is also spooking the markets, this whole Hawala traders, Mahadev betting app scam connections, which are being investigated by ED. Gensol Engineering has seen that pain. Their promoters put out a tweet yesterday saying that this particular company and this operator or trader has nothing much to do with them. He's a silent investor. He's about 1.5% stake, but that stock also down. Shrikant, thank you so much. Thank you for joining us today on the show. We will have to keep our eye on what happens in the next hour and a half. Niraj.
Yep, but we have 15 minutes of somebody who called this market slightly sluggish around the budget time, Vijay Kedia, and he joins in right now to try and tell us what to do in a scenario like this. Should we call you Lord Kedia because you sung that song that Lord Bobby Deol spoke out in that movie? But Mr. Kedia, good having you. Thanks for joining in. मुझे पता है कि last time that we spoke, you were a bit circumspect about the whole construct of the market. Is this on expected lines, and do you think कि यहाँ से और गिर सकता है?
So first of all, thank you very much for inviting me. The new lord in the town is Bharti Mittal, kya Sunil Mittal, Bharti Airtel, Sunil. He's the new lord in the town. As you said, I think, of course, it was bound to happen, Niraj. As we all know that it does not happen. Market कभी भी एक तरफा ऐसे नहीं चलता है. So I was more concerned about the euphoria which was happening in this market. अभी देखो वो क्या क्या नाम आने लग गए हो, महादेव और ये वो, तो देखो दीवानो तुम ये काम ना करो, महादेव का नाम बदनाम ना करो. तो अभी ये सब नए नए लेकिन ट्रिक है, ये सब ट्रिक सब पुराने हैं और ये नया नया रूप बदल के नाम बदल कर ये सब मार्केट के अंदर में आते रहते हैं. So it was bound to happen, and I am happy that it is happening in this market. Market will correct itself. And that will set a trend for a new bull market or a new upswing.
Mr. Kedia, what's your sense? How much, do you expect the pain to last for a particular period of time? Or will the market need to fall, let's say, by a particular number, percentage or whatever it is, before as you said, the dust settles?
See, one thing is what I understand here is I don't think this is market going to crash like Europe ki marun pada ki wo itna bada hai. Because market is there are still froth in some because mid cap is a large 5,000 shares are there in mid cap, small cap and micro cap and all. So I'm not expecting that this market is going to crash. I am just expecting that an adjustment will happen in this market. There are many stocks which have fallen 30-40% from their peak, but they have also risen 3 times, 4 times, 300%, 400% from their bottom. So there are two ways of look at it. So I feel that maybe in some of the pocket, in some of the stocks, you will find value. Maybe already value is there, or you may find value in this week or coming week. But index, so far index is concerned, I think it will take some time to show a new high, and even those shares which have corrected also will take some time to show new high.
केडिया जी, आपसे जब हमने बजट में बात की थी, तमन्ना हियर, you said very clearly कि there is going to be some kind of a pain, 10 to 15% का एक correction आ गया. मेरा सवाल ये आ चुका है कि और है, and is it also a lot of factors, we were talking about the 15th March impact, electoral bonds में किसका नाम आएगा, stress test हो रहा है, इसके बाद क्या थोड़ा stabilize होगा?
मेरे को लगता है मार्केट स्टेबलाइज होने में थोड़ा टाइम लगेगा. कई पॉकेट में करेक्शन आ चुका है, कई पॉकेट के अंदर में, और ये मार्केट करेक्ट होने में थोड़ा और टाइम लगेगा. लेकिन मेरे को बहुत ज्यादा मंदी नहीं लगता इस मार्केट के अंदर में कि कोई ये मार्केट कोई बहुत ज्यादा कोई क्रैश हो जाएगा, ऐसा मेरे को नहीं लगता है. और तो सेंटिमेंट थोड़ा सा साइडवेज या थोड़ा सा वीक ही रहेगा. जो शेयर्स अभी रिएक्ट नहीं हुए हैं, अभी हो सकता है वो ज्यादा रिएक्ट हों मिड कैप और स्मॉल कैप में, जिनमें ज्यादा वैल्यू नहीं है, वो थोड़े ज्यादा वो अभी और थोड़े करेक्ट होने बाकी है. इसका मतलब ये नहीं कि सब जो गिर गए वो भी गिरेंगे, ये रोटेशन में चलेगा. पहले भी जब बढ़ता था ना, तभी ऐसा नहीं था कि सब शेयर एक साथ बढ़ जाते थे. पहले 500 शेयर बढ़े, फिर दूसरे वेट करते रह गए, फिर दूसरी कतार आई, फिर तीसरी कतार आई. ये गिरने में भी ऐसे ही कुछ होएगा, और एक बार टाइम थोड़ा सा निकालेगा थोड़ा.
Hi Vijay, it's also Samina joining in. So very clearly you believe that this is going to be more long and painful than short and sharp in terms of a fall. A few months ago, the only theme on the street was anything government facing becomes a blind buy. With these stocks down 20 to 30%, so railway, defense, fertilizers, election around the corner, are these stocks still attractive to you? Would you recommend investors to go buy them because they looked attractive 30% higher?
No, as I said, they might have come down by 30%, but they have also risen 300%. So I personally would not like to buy any these PSU stocks. That does not mean that there is some problem in those stocks. Future is very bright, but I usually like to enter into the stocks when the journey is about to begin. So personally, I would not like to buy all those shares. But you may find value in some of the stocks, but not every stocks. I don't think that every stock has become a screaming buy. I don't think so.
Kiran ji, एक छोटा सा break हम लेंगे. Viewers, we're going to take a very short break. But आज का break किडिया जी आप लीजिए एक dialogue के साथ. For our viewers, what can they expect on the other side?
Okay. बाद में बताना भी बताना.
बताइए क्या expect कर सकते हैं आपसे और क्या viewers को देखना चाहिए इस वक्त?
यही देखिए कि अभी भी आप कोई शेयर्स लेते हैं तो सिंपल एक ही गुरु मंत्र है यहाँ पर तमन्ना जी कि आप कोई भी शेयर्स लेते हैं ये सोच के चलो अभी वो 30% गिर गया है ना, अगर अभी आप ले रहे हैं तो ये समझ के चलो शायद 20% और गिर जाएगा. अगर आप अपना माइंड को इतना मजबूत कर लिए कि भाई ठीक है 30 गिरा 20 और गिर जाएगा, आपको कोई हरा नहीं सकता है. यहाँ पे अच्छे शेयरों की मैं बात कर रहा हूँ. ये दूसरे जो भी मैनिपुलेटेड है, ऑपरेटेड है, जो आजकल सबको सोशल मीडिया के थ्रू सबको नाम मालूम पड़ जाता है, उनको तो दूर से ही करके सलाम. उनको तो सलाम ही कीजिए, आप उनका नाम भी मत लीजिए. जिस रास्ते में जाना नहीं है उसका नाम भी नहीं लेने का है. तो सिलेक्टिव स्टॉक में रखिए जिनके अंदर.
Okay, so what are those selected stocks? We're going to take a very short break and come back with Vijay Kedia on that and more. Stay tuned.
Welcome back. You're watching India Market Open. The markets are struggling to find some stability, but it looks a lot more calm than it did in yesterday's day of trade. The Nifty is trading flat and now marginally in positive territory. So, like we said, some stability, a little bit of a bounce is what we should be hoping for in today's day of trade. Mr. Kedia, I quickly want to move on to banks. Shares of some of these PSU banks have outperformed private sector banks over the last 3 or 4 years. Do you now think it's time to rethink the trade in banks, maybe switch to private banks and move away from PSU banks? And if yes, if you've got a preferred pick here, would be great.
No, I would personally not think so. I still find PSU's bank cheaper than these private banks and all. So I think this thing will keep on continuing, and this PSU bank should keep on performing better than, I don't know better than the private banks or not, but should keep on performing better. And I think they still have more, room to go.
विजय जी, कौन से बैंक्स अब आपको आज कौन से आपको पसंद आ रहे हैं? पीएसयू बैंक्स, एक नोट था हाल फिलहाल में that the valuation gap has closed between public sector banks and private sector banks, and it was in that sense negative on SBI. Would you still bet on an SBI versus an HDFC, or which would be your top favorites?
नहीं, मैं आपको बताता हूँ, फ्रैंकली मेरा बैंक में कोई इन्वेस्टमेंट नहीं है, लेकिन मैं वॉच तो पूरे मार्केट को करता हूँ, बराबर बात है। तो मेरे को क्या लग रहा है, आप एक चीज खुद देखिए कि ये जो भी पीएसयू जो बैंक है, जिस हिसाब से दूसरे सारे शेयर्स, सारे ने कई शेयर्स 30% 40% गिरे हैं, पीएसयू बैंक इतना नहीं गिरे। ये मार्केट को समझने का एक सबसे बढ़िया तरीका यही है कि जब मंदी आती है, जोर से मार्केट गिरता है, कौन सा शेयर कम गिरता है? जो शेयर कम गिरता है उसके अंदर में वैल्यू है। लेकिन ये जनरलाइज इस नियम को नहीं कर लेना, हो सकता है आज नहीं गिरे कल गिर जाए, लेकिन जनरली जो आप देखेंगे तो जो पीएसयू जो बैंक है, ये अपने जैसे को बोलते हैं ना, फोर्ट को होल्ड करके रखा है, उनमें कोई क्रैश वैश नहीं आया, उनके अंदर में इतना गिरा नहीं। तो ये अपने आप में बताता है कि उनमें इनहेरेंट स्ट्रेंथ है। तो इस बॉल का मेरे को हो सकता है एसबीआई अच्छा हो सकता है और भी जो छोटी छोटी बैंकें हो। मेरा इनके अंदर में ज्यादा स्टडी नहीं है, मैं बीच बीच में कभी बैंक ऑफ महाराष्ट्र लिया था, फिर मैं निकल गया। मेरा इनके अंदर में क्योंकि थोड़ी इनकी चाल स्लो है, और लेकिन ये आगे अच्छा करेंगे ऐसा मेरे को लगता है।
विजय जी, कौन से स्मॉल कैप्स आप अभी पिक करेंगे? इनको पिक करने में आप माहिर हैं और इनको सबसे बड़ी मार पड़ी हुई है। एनीथिंग दैट यू थिंक और एनी स्पेस दैट यू थिंक नीड्स टू सी और इज एन अपॉर्चुनिटी राइट नाउ?
देखिए, स्मॉल कैप का तो मालूम नहीं, जैसे कल भी जिस हिसाब से मार्केट गिरा तो ऑफकोर्स मेरे मन में ये आने लग गया। मेरे भी कई शेयर्स है जो 25% 30% ऊपर से गिर गए। और देखिए, ये मार्केट इतना यूनिक है, हम आज ये बात कर रहे हैं, मेरे कई शेयर जो 30% गिरे हैं, उन्होंने अपना टॉप 4 महीना पहले बनाया था, तो वो 4 महीने में गिरते आए हैं। वो ऐसा नहीं है कि उन्होंने कल ही गिरा, कल भी जब वो तूफान आता है तो उसके साथ और भी सब एक साथ बह जाते हैं, तो कल भी वो गिरे, लेकिन उनका टॉप 4 महीना पहले बन गया था। तो लोगों को ये सोचते हैं जिस दिन निफ्टी का टॉप बनता है या जिस दिन अचानक मार्केट एक साथ 2000 शेयर क्रैश होते हैं, तब लोगों को समझता है मंदी आई है। ये मंदी 4 महीने से चल रही है। अगर आप इसी को मंदी बोलते हैं या करेक्शन बोलते हैं या रिएक्शन जो भी आप बोलते हैं, ये 3-4 महीने से अलग अलग पॉकेट में चल रही है। कल जरूर मेरे मन में आया कि मेरे कुछ शेयरों के अंदर में कि मेरे को ऐसे लग रहा है कि शायद ये टाइम आया है इनको लेने का, तो मेरे मन में ऐसा आया। लेकिन मैं उतना एडवेंचरस नहीं होना चाहता हूं, क्योंकि मैं लेके फिर 5% ऊपर या 10% ऊपर मेरे से बिकता नहीं है। फिर मैं 10 साल के लिए लेता हूँ, 5 साल 10 साल के लिए। तो मेरे मन में जैसे आया कि भाई एयरलाइंस में, जैसे मेरे को लगा कि मैं कुछ मेरा स्टेक बढ़ाऊं एयरलाइन स्टॉक में, ऐसे मेरे मन में आया। मैंने किया नहीं है कुछ, लेकिन देखते हैं 1-2 दिन, 5 दिन और 7 दिन देखते हैं।
हमें बताएं
Mr. Kedia, so airlines तो hardly any representation, but airlines and airports and related spaces, या सिर्फ airlines?
नहीं, मेरे को लगता है पूरा टूरिज्म के जो भी शेयर्स आप समझो, इंडिया के अंदर में नया थीम चालू हो रहा है आप इंडिया के अंदर में, बाकी सब थीम चलने वाली है, लेकिन ये थीम थोड़ी सी निग्लेक्टेड रही है। तो इसमें चाहे आप एयरपोर्ट पकड़ लो, इसमें चाहे आप एयरलाइंस पकड़ो, या इसके साथ उनके जो सपोर्ट करते हैं वो आप पकड़िए, कोई चाहे वो होटल हो या रिजॉर्ट हो या जो भी हो। मेरे को लग रहा है ये सेक्टर सालों से, दशकों से ये निग्लेक्टेड रहा है। तो अब जिस तरह लोगों में एक चेतना जगी है इंडिया घूमने की और ट्रैवल इन इंडिया या जो हो रहा है, तो ये ठीक करने चाहिए, ये ऐसे लगता है। लेकिन मेरा मेजर, हाँ, तो मेरा कुछ रिजॉर्ट में है, कुछ एयरलाइन में मेरा जो अपना इन्वेस्टमेंट है, एयरपोर्ट पे नहीं है मेरा इन्वेस्टमेंट एज ऑफ डेट.
What about PSU stocks? You're seeing a bit of a recovery today, केडिया जी. आज इनकी हालत थोड़ी ठीक ठाक लग रही है compared to at least yesterday. और ये पूरा जो हुआ था कि ज़्यादा वैल्यूएशन हो गई है, सरकारी कंपनियां अब ज़्यादा एक्सपेंसिव हो गई हैं, आज तो रिकवरी हम देख रहे हैं. यू थिंक लॉन्ग टर्म दिस इज वन स्पेस? आई एम नॉट टॉकिंग अबाउट बैंक्स, आई एम टॉकिंग ओवरऑल PSU, डिफेंस एक्सेट्रा, दैट यू वुड बेट ऑन?
देखिए, PSU का मेरे को लगता है भविष्य अगले 10 साल के लिए बढ़िया. ये पूरी इंडिया स्टोरी है. आप बिना PSU स्टॉक को लिए बिना $30 ट्रिलियन की इकोनॉमी है, अमृत काल या ये काल या वो काल और या 10 ट्रिलियन इकोनॉमी, ये हो नहीं सकता है. तो और उनके अंदर में सब में कॉर्पोरेट गवर्नेंस का सबके अंदर में पहले जैसे लगता था वो इश्यूज चेंज हो रहा है. मेरे को क्या लगता है कि ये सारे अच्छे करने वाले हैं. खाली प्रॉब्लम इस बात की थी कि ये फ्रॉथ है कि अचानक वो बाजार में जो यूफोरिया हो जाता है उससे खाली डर लगता है. तो वो पिक्चर में बोलते हैं ना कि थप्पड़ से डर नहीं लगता साहब, प्यार से डर लगता है. तो वो इतना प्यार जो ये दिखा रहे थे तो इस बोलकर खाली थोड़ा डर लगता था. मेरे को लगता है कि ये सारे अच्छे करने वाले हैं. वैल्यूएशन का देखो आपके माइंड में है. आप एक पर्स खरीदती हो तमन्ना जी, वो 5,000 में मिलता है. लुई विटोन का खरीदती हो 2.5 लाख रुपए में मिलता है वो. तो ये डिपेंड करता है कि आप किस चीज की क्या वैल्यू देते हो. मेरे को लगता है इनका भविष्य बढ़िया है. और ये भी मेरे को लगता है कि ये जो मार्केट में जो करेक्शन आया है ये अगली बड़ी तेजी का एक सूचक है और उसके लिए एक थोड़ा सा और इजी रहेगा कि आगे और बड़ी तेजी आए. तो ये ऐसा मेरे को लगता है.
Very lastly, Mr. Kedia, आपने बोला कि aviation looks good to you because it's the whole tourism pitch that's doing well. Railway is also on that list because if you're buying airline stocks, railways have a little more exposure then in that case. And if yes, two stocks, if railways, if not, but two stocks that you like beyond aviation that you've already told us.
No, first of all, railway stock could be better, could be good investment. I am not invested in any railway stock. And I have personally invested, so far airlines is concerned, I have invested in Indigo. It is on the public domain. Everybody knows that I have invested in Indigo. And I don't know it is going to rise or fall. I don't know. I'm not recommending what I have done for myself that I'm discussing. So I like such kind of stocks. Railway could also be a better bet, but I'm not following them.
Apart from Interglobe, KDG, that you like, that is in your portfolio, not of course recommending.
Sorry?
I said anything else apart from Interglobe that's in your portfolio, not in terms of recommendation, but stocks that you hold?
No, tourism, as I said, that tourism could be a big theme for this decade. So I have some stocks in like Mahindra Holidays I am holding, but I am holding for last 5 years. And Interglobe, and I bought some Make My Trip. Maybe I bought some, so which is not listed here in India. So I think these two stocks.
आपकी लिस्ट में लेकिन क्या है जो जब थोड़ा स्टेबलाइज होगा आप खरीदेंगे? आई एम श्योर यू ड्रॉन अप अ मेंटल लिस्ट. उसके 3-4 तो चॉइसेस बताइए कि क्या है उस लिस्ट में.
नहीं, मेरे पास में देखो ज्यादा पैसे है नहीं खरीदने के लिए, क्योंकि मैं हमेशा हाँ वो आप कुछ देंगे तो मैं फिर कुछ डिसाइड करूंगा.
मतलब लुई विटॉन बैग भी मैं ही खरीदूं, आपको फंड भी मैं ही करूं, उस दिन ख्याली पुलाव से आगे निकले.
नहीं मेरे को देखिए इंफ्रास्ट्रक्चर स्टोरी जो है, बिना इंफ्रास्ट्रक्चर के, मैं शायद आपके साथ भी पहले जो इंटरव्यू किया था उसमें तमन्ना जी कहा था बिना इंफ्रास्ट्रक्चर के आप इंडिया को इमेजिन नहीं कर सकते, इंडिया ग्रो कर सकता है. मेरे को इंफ्रास्ट्रक्चर स्टॉक मेरे को 10 साल की तेजी लगती है मेरे को. तो आप उसमें कोई देखिए जो शेयर 25-30-35% गिर गए हैं ऊपर से, उनको ये समझ के चलिए कि हो सकता है और 20% गिर जाए. नहीं गिरे तो अच्छी बात है, उनमें इन्वेस्ट करना चाहिए.
कोई बिफोर वी रैप अप एंड थैंक यू विजय केडिया जी, कोई पोएम, कोई गाना हमारे इन्वेस्टर्स के लिए?
नहीं, वही किसी को भी ना समझ में तू आए, तू बढ़ता क्यों गिर जाए, ये 90% लोग क्यों पैसे गवाए, जब सोचा समझा खूब समझ में आए, जो लेके गए बैठ वही तो है कमाए, ये 90% लोग बैठ नहीं पाए. ये खाली लॉन्ग टर्म का खेल है तमन्ना जी, यहाँ पर और कुछ नहीं है. अच्छे शेयर्स को चुनो और उनमें बड़ा इन द सेंस जो भी आपको इन्वेस्टमेंट करना उसका रेशियो वाइज एक रीजनेबल इन्वेस्टमेंट करो और लॉन्ग टर्म के लिए करो. इसके अलावा यहाँ पर कोई दूसरा मंत्र नहीं.
दैट इज द मंत्र.
खरीदने का वही एक साधन है.
That is the Vijay Kedia mantra. Thank you so much, Mr. Kedia. Always a pleasure and real fun speaking with you. Very short break on the show, but on the other side, we're speaking with B. Thiagarajan, Managing Director of Blue Star. right, one aspect of the fall that we saw yesterday was how it has impacted your mutual fund investments. And this was reflected in actively managed schemes in the small and mid-cap category. But based on the approach of fund managers in the space, some were hit worse than others. Alex Matthew is joining in to tell you more.
Absolutely. Tamanna, first a caveat, nobody's saying that these schemes are better or worse based on one day's performance, but they'll give you a sense of how aggressive the fund manager has been. In the category, small cap actively managed schemes on an average lost about 4%, mid cap lost about 3.5%. The index dropped 5% for small caps, 4% for mid caps. The biggest losers on the small cap end, Quant, losing about 5.8%, more than the benchmark, followed by a few others. Quant, by the way, has gotten the most inflows. Among the least declines, let's pull the next one up. You have PGIM India, UTI, Axis Small Cap, SBI. A lot of these have a more conservative approach, even in the small cap end. Let's pull up the mid cap winners and losers. You have the mid cap biggest losers. Again, you have Quant at the top of the list, losing about 5% or thereabouts. Again, more than the benchmark. Taurus, ITI and Mahindra Manulife, some of these are very small schemes that have gained substantially over the last year, have lost ground because of an aggressive strategy. Among the least losers, let's pull up the next one, Motilal Oswal, PGIM, once again Axis, and you have SBI Magnum and Kotak, which by the way has gotten the most flows. One last piece of information about the flows over the last year as of January, Quant in the small cap category getting over 8,000 crore of inflows. In the mid cap category, you have Kotak once again, which has gotten the most flows. Simply put, of course, a lot of these schemes would have recovered in trade today. It's just a question of how much downside protection they're offering you when there is a crack in the market, Samina.
Yeah. You know, before we go to our next conversation, I just want to point out what's happening in the broader markets. You're seeing quite a smart recovery. Pull up the Nifty small cap 250, about 2% up. Your micro cap is about 2% up. You know, you are seeing right now a sharp recovery in some of these smaller stocks. So I'm going to pull up the gainers, and a Swan Energy, a RITES, an IRB Infra, some of the most beaten down ones up about 7 to 9%, RITES 8.5%, IRB Infra, Angel One, Central Bank. So you are seeing an interesting kind of a recovery this morning, Niraj, and early on enough.
It was, yeah, but from the intraday piece, I mean, 1% lower to what it is doing right now, it's been a fabulous first half,
absolutely.
For sure. Yeah. Well, could it be a fabulous summer for some of the companies? And I think that's the perspective that we want from Mr. B. Thiagarajan, Managing Director of Blue Star, about what a scorching summer could do to the space at last. Mr. Thiagarajan, this and more with you today. Thank you for taking the time out. What's your sense, Mr. Thiagarajan, about how is the demand scenario shaping up for cooling solution companies?
Good morning, Niraj. It's a pleasure interacting with you. The forecast is good. The weather forecast, the forecast that is coming from the field, the dealer sentiments, everything is good. So it should be a wonderful summer season ahead. That's what we are all looking forward to. My estimate is that given that last summer was a washout due to rains, I think this summer season one can expect at least 20% growth. And Blue Star is planning to target around 25% growth compared with the summer season last year. Having said that, the election season is on. In the past, we have seen some kind of slowdown. So let us wait and watch.
Okay. Would this 20% growth that is being not predicted really, but thought of, let me choose my words carefully, Mr. Thiagarajan, is that something that is a surprise, or is it par for a course? And is there a room for some upsides to this?
I think it is a modest forecast, I would say, given the penetration levels and what is being estimated as India will surpass China by 2047. By 2030, the market size for room air conditioners should be more than doubled. Given that, it has to grow faster. And I think this will be a significant takeoff moment for the industry.
Okay. Okay, Mr. Tyagarajan, the other aspect is, one aspect is, of course, the kind of demand that comes in. The other aspect is what is the cost situation looking like? And while 2023 was marked by lower commodity costs, there is corporate after corporate has told me that there is some bit of an uptick that is happening in the input costs. Maybe not due to supply chains alone, but maybe just otherwise that after hitting a bit of a trough, commodities might be bouncing back. I would love to understand your view about what has happened thus far, but also about how you see this situation over the course of the next 3 to 6 to 9 months.
Niraj, I am not a commodity expert.
Sure.
My understanding is as follows, that the Western markets as well as China were not growing to the extent they could. Under the circumstances, commodity prices were fine. It was under control. And you also had, in our case, it is not the commodity prices alone. Because we import quite a bit of metallurgical items as well as components, exchange rate also is an important thing. Despite a couple of wars that are going on, the exchange rate was also stable. So that helped us to hold on to the prices and margins. It helped us to hold on to the prices as well as margins. But if the global economy is going to recover, and India's consumption going up, India is the fastest growing market for air conditioning and refrigeration. If it begins to grow, given that we all consume even copper in a significant manner, commodity prices can go up. But the good news is as follows. Good news is the manufacturers, not only Blue Star, everyone have understood that they have to grow responsibly, grow sustainably. In that context, we are governed by the energy labeling program. We are governed by the extended producer obligation for the e-waste. So systematically, the material content in an air conditioner is being brought down. In Blue Star, we are ensuring that we design the products with a lesser material, at the same time higher reliability. That's why a significant amount of R&D investments are going. So the bottom line is as follows: you cannot control the forex, you cannot control the commodity prices. It is controlled by someone else. You can control the design aspects. You have to be prudent about managing the margins. But I can tell you the competition is going to be intense.
Just on the word of that intensity of competition, Mr. Tyagarajan, Tamanna here, very good morning and great to be speaking with you as well. I want to understand what the strategy is as far as the Blue Star is concerned, and what is the demand that you are seeing in your non-key metro segments, in your, say, category B towns and rural demand. Are you seeing some sluggishness there?
Good morning, Tamanna. The first I will deal with the demand. The growth for room air conditioners is driven directly by aspirational middle class and tier 3, 4, 5 markets, first-time buyers. So more than 90% are first-time buyers. 65% of the procurement is happening from tier 3, 4, 5 towns. More than 50% of air conditioners bought or through consumer finance scheme. Then you can imagine they are consuming entry-level products, and therefore you need to make it affordable. And the product launches that are taking place are to deliver products at all price points. And our strategy is to invest extensively in research and development and backward integration to the extent possible, and ensure that high reliability is delivered at an affordable cost and price. That is our strategy. Then we have to grow our market share, and which means it is apart from distribution penetration, making the brand relevant for those consumers. That's why we have engaged Virat Kohli for many years now, and
the Virat Kohli and the campaigns associated with that is providing us that kind of connect, expertise, leadership, and appeal to all age groups as well. Now, the strategy is intact, and we will continue to invest in research and development, continue to research and invest in backward integration, and ensure that our aftermarket service standards are world class. It's as simple as that. This product category is simple. It's not a complicated product. It's
also a crowded one. It's also a crowded one. It's also a competitive one. It's also a crowded one. That's which is why I'm trying to understand about the competitive edge to it. And is your focus then on entry level and affordable aspirational category, like you said?
So if the market is going to grow by more than double by 2030, and it is going to be the largest market in the world by 2047, you should anticipate intense competition. Who is here, and they are leaders. They have their own strengths, and you should be prepared to compete. Now, we are not focusing only on the entry level. We do have products which are meant for heavy duty segments, that where it has to work at 50 degrees centigrade and above without derating. We do have products which are futuristic, Wi-Fi enabled, artificial intelligence driven products are there. We have products which incorporates the air purification and health related issues. We have products which are super energy efficient, so that people who are using 18 hours, 20 hours a day, they are able to save energy and get the payback. We are in all segments equally, where we are not only selling room air conditioners to residential segment. We are a big player in B2B as well. That has been our pedigree. So we do have products for that segment as well.
Got it. Okay. Mr. Tyagarajan, just hold on to that thought. We just have to mark the new kid on the block, and that's Gopal Snacks. It's listed at a discount of 12.5% of the issue price on NSE. Remember, not a very heavily subscribed issue any which ways, but just the nature of the beast currently with the markets the way they are, that very unlikely that you will have very strong listings these days unless the issue has been subscribed heavily. So be mindful of that. The numbers not looking all that off. And remember, some of the snacking companies have had a really good time in terms of growth post the listings in the last few years and the kind of growth numbers that they've clocked in. Let's just wait and watch if this one can do something similar. But back to the conversation with Blue Star. So, Mr. Tyagarajan, I want to get back to this. If indeed, I mean, your launch of affordable ACs and your views that you've just expressed on the non-metro markets, the belief that the current season might have a base growth of 20% and there could be some upsides there, etc., and the view that you've given on input costs, you reckon that growth could come in at operational metrics that you've clocked in the recent past, or could they improve? Because I mean, you've stayed circa 7% on the EBITDA margins for now 3-4 quarters on a trot. You reckon that is something that will stay, or would you improve upon it?
I think it's more like 7.5% to 8%, and we, a few years ago when we have interacted, I had been hopeful of 9 to 9.5. And that had been brought down to 7.5 to 8 last year. I think that's what it will stay, and it is important for us to maintain that. If something better happens, it's a bonus. I think in room air conditioners, 7.5 to 8 will be a good margin. See, because you do have quite a bit of cost heads which are unavoidable. You have to cope with the energy label changes. You got the extended producer responsibility for the e-waste. You have consumer finance scheme to to be taken care of. You have marketing, advertising costs. You can imagine something like IPL, it is going to cost, and invariably it falls during the summer season, and that is one vehicle which helps you to reach your target audience. And given all this, I think 7.5 to 8% is a good operating margin for this product category. Of course, there are B2B products like commercial refrigeration or central air conditioning, where you may have opportunity to improve the margins.
Mr. Thiagarajan, one last question from mine at least. From FY21 end, you've clocked in some serious growth, FY22, FY23. The trailing 12-month numbers also reasonably high. On that high base, what's the kind of growth that you envisage, say, for an FY25? Could it be similar to what you've done in the last 3 years as a CAGR, or could it be lower because the base is higher?
No, the last 3 years I had, some kind of, COVID, post-COVID recovery, etc., which had been much more than what we anticipated. I would put it as follows. Both commercial air conditioning and residential air conditioning, as well as commercial refrigeration, the penetration levels are very, very poor. And the industry has an opportunity to have somewhere between 10 to 15% CAGR. Blue Star will have to gain market share further. And in that context, something like a 20% growth will be an aspirational goal for Blue Star. So you should not look at the base. We are a minuscule country, and there is a huge headroom for growth. So you should not get worried about it's a large base. The base is, according to me, a small thing in this country. You have to look forward. You have to invest in research and development, invest in manufacturing, and invest in distribution after sales, and look forward to a huge growth. It is a golden moment for Indian air conditioning and refrigeration industry.
It is also for, in a sense, issues that will concern everyone, because as temperatures are going to get higher, you are going to have to find more large-scale and affordable cooling solutions. Thank you so much, Mr. Thiagarajan, for joining us on the show today. Very quick look at where the markets are settling, and some stark moves on the upside that I'm spotting. Action Construction, 12.5% up this morning. A Paisa Digital, which has seen a hangover of sorts. Yeah, there's Action Construction for you. Paisa Digital under the hangover of a high court-directed RBI probe into its lending practices at a 10% circuit today. Railtel, another stock which really had a bad day, got railroaded really yesterday, doing fairly well. So you are seeing pops there. Your broader markets are showing a better recovery, and obviously because they fell more than your key indices. So, Niraj, fair to say that in the first, I think, hour or so of trade, you've seen basically a buy on dip strategy creeping in, at least to some extent.
For now, I'm winning the bout with Murli. That's the limited point I'm making. But yeah, well, let's take a break and try and understand what Tamanna just asked with our guest, Ajay Srivastava Johnson, on the other side, as does Devin Choksin. We'll try and probe them on this very point. Stay tuned.
All right, welcome back. You're watching India Market Open, and we've got Ajay Srivastava, MD Dimensions Consulting, joining us now. Very good morning to you, Ajay. And frankly, it's turning out into a better morning than was anticipated initially. What, in your view, is showing some of the positive moves, especially on the broader end of the market?
I think two things are playing out today very clearly. One, of course, is the short covering, which always comes around after a big fall. And secondly is that there is no panic selling in the market because lots of people on margin who had bought on loan against shares had taken in, have kind of liquidated the holdings. So I think the weaker hands, the leverage hands, quite a lot has moved out yesterday at this point of time. And the only overhang remains is that if the mutual funds see redemption in the small cap funds at this point of time, they would be very difficult to find it to offload the stock. So that overhang remains. But the piece in the market is only to the extent that the weaker hands exited yesterday, the leverage hands partly exited yesterday. But the big elephant in the room is, should there be large-scale redemptions from small cap mutual funds, who is going to be the buyer of those stocks? And I think that's what, and SEBI's stress testing report should come out today. But that's a big overhang if people are holding small cap stocks, and there is the panic to kind of encash your gains in the funds before things turn ugly. So I think that's overhang remains. Panic selling is over. Leverage hands are out. And I think that's what we're seeing, stability in the market today.
Ajay, the stress test report, I believe the deadline is 15th. So do you think that's going to, instead of just being a test of stress, be some actual stress there in the market as far as, mutual fund investments are concerned? And the other thing happening on the 15th, of course, is the Election Commission revealing details of bond purchasers. Is that also an overhang somewhere in the backdrop as far as the market is concerned?
Of course, that's, anybody who wants to commit today is going to wait for the two events to... Anyway, small caps, there are no buyers in the market. I don't think anybody is allocating capital to small caps. And that overhang of a redemption of mutual funds will remain. And I think the stress test will become more of stress for the investors, because the stress test will reveal what we are already seeing, that the mutual fund ability to redeem 10 to 15% of redemption in a day or two is almost zero at this point of time. So that stress test is going to stress people who are in small cap funds, definitely. Election bonds issues will definitely charge up the political atmosphere. May not change the end result of the election perhaps, but definitely the environment will get charged up, and you can use that volatility to come into the stocks that you want to add. There have been a lot of corrections at this point of time. So I think use it carefully to build your portfolio, and the volatility will happen on the election bond. This thing definitely will happen, and use it to your advantage at this point of time. And, if you're in, the point I was saying was, if you're in small cap stocks, you can't exit. Quite a few are on circuit filters even today as you watch. But if you're in a mutual fund, you can definitely exit and move to large caps. And I think that arbitrage advantage is going to play in favor of mutual fund investors, but will not go in favor of the equity holders of small caps at this point of time.
Ajay, good morning, Niraj here. Just one quick word for the very, very near term. You have 15th, which is a big day, but post that, the advance tax outflows go away. There is also this, the details of advance tax collections, etc., which will come in. But then we head closer to the earnings season release as well. Is this selling going to get more pronounced, or do some high frequency indicators that we get over the next 15 days help the market recover?
Niraj, good point is that depending on where you are in the market, if you're in the large cap space, non-banking large cap space, I think you're in a safe bet, because most of the companies are going to report decent results. So whether you are in a hotel, or whether you are in telecom, or whether you are in industrial or capital expenditure companies, I think by and large you are on a safer wicket, because they have a good trajectory of earnings. Even if earnings disappoint partly in a quarter, people don't change their views on these companies. The problem stems from the banking part of the market, the NBFC part of the market, because that is where all the stress is. Because simply speaking, the raw material money has gone very expensive for the banks. So, and number two is, with all the slashdowns happening, the ability to lend to NBFCs also get compromised. So I think banking space will feel the maximum squeeze, if you ask me personally. But the industrial space, the telecom space, the hotel space, the airline space, I think they will have a safe run, whatever happens to volatility. As I said, small cap, you are in real danger, because If mutual fund redemptions take place, you have nowhere to go. Large mid caps, definition is mid cap very large. I think you are still in a safer bet if you got decent companies, little capital market related companies. If you got AMCs in your portfolios, I think you are in a safer wicket at this point of time, and do not worry about short-term volatility. Overall, I think this correction has been good, but I still keep saying the fact, I said it about 2 weeks back, that gilt will give a better return than the index this year, which we are quite sure of. So if you got some money, park it in gilt. That's where the action is going to happen in this year, not in the equity markets.
Oh, park it in gilt, says Ajay Srivastav. That's quite something. Ajay, my next question was going to be, is there anything you would pick in the small and mid-cap space as multi-baggers with a long-term view? But I don't know if there is anything on your mind right now after your last answer.
No, I can't give you stock, but I told you just now that I think we are very comfortable buying the AMCs. We are very comfortable buying the capital market-related stocks like the depository companies, because the law has changed for the country. Even private limited companies need to now have dematerialized shares. So you can imagine the kind of business that is going to come to these companies at this point of time. So I think capital market-related spaces, whether it's stock exchange, whether it's depositories, whether it is AMCs, I think you are in a decent space. We are buying those stocks at this point of time. Hotels, as I said, we definitely are there and we will add on. Capital good, there's no need to panic out. The correction gives you add on to the stocks. I think what we are not buying at this point of time is, really speaking, the banking space. Mid-cap banking space we are not buying. Mid-cap NBFCs is zero absolutely, because I think there the regulatory action is going to impact you. But this is a space, I think 3 other things we outlined, we are happy to buy, and we have bought today as well at this point of time.
Okay, so there are pockets of opportunity there. Thanks, Ajay. Always a pleasure to speak with you. Very quick break, but we're coming back with our special coverage on the other side.
Right, and we track markets because the markets are having such a healthy pullback. Devin Choksi, Managing Director of DR Choksi, right now joins us on the show. Devin, the broader end of the spectrum, is this a dead cat bounce of sorts after a very bad day, or is there merit in this? Because a lot of people are saying that we will hear about advanced tax collections and you know, the tax outflow problem also gets solved till the 15th of March. So all of that, what's your sense?
Hi Niraj, good morning. Well, between yesterday and today, as far as I think the corporate workings are concerned, as far as I think economic situation is concerned, and as far as investors' portfolio money is concerned, largely, I think nothing has changed. Most of the investors have made a significant amount of gain in this particular financial year, and I think that's a happy point to talk about. Frankly speaking, if at all, I think in the last 48 hours, 72 hours, I think whatever the fall in the market has taken place, in fact, it has only helped some of the heavy earners, I think, to take some amount of, I think, tax compensation off, I think, by way of, I think, booking some part of the loss. If at all, I think they would have done it. So in my viewpoint, I think nothing has changed. SEBI's caution, as far as I think the small and mid-cap companies are concerned, and to the mutual fund to conduct the stress test, is definitely, I think, a precautionary one. Market should not get nervous at this point of time with any such kind of, I think, announcement. At the same time, I think those people, those investors who have basically just simply traded without looking at the fundamentals, for them, it's a warning sign. So I guess, I think, all in all put together, this particular market is behaving much maturely. I would think that I think the amount of money which is getting into the system every successive month, with 20,000 crore SIP already on as far as last month is concerned. All in all put together, I guess I think that things are looking quite steady, quite healthy. Maybe some extraordinary amount of valuation stretch which has happened in some stocks. They needed to get rationalized, and that's what the market is doing currently.
Okay, we need to slip into a break, but very quickly, 60 seconds, Devin, before we thank you. The Adani Group stocks have made a bit of a bounce. Standard disclosure, viewers, they own NDTV and you're watching NDTV Profit. But the bounce is commendable. Any thoughts here?
All fundamentals are in place. Companies are absolutely doing well, as my understanding is, and probably they are generating cash, which is fundamentally very important for any infrastructure company. So if they bounce back, it is for a reason, I believe. So, and I would think that I think those investors who are invested into this company, probably they need not worry about the fluctuations which happened in the last 48 hours.
Got it. Fair call. Yeah, just fine, because a lot of economy-linked stocks have come back. Devin Choksi, take a moment to thank you for joining in today. Really, really appreciate your time and your insight.
Thank you.
That's all the time that we have on this show. Thanks so much for watching. Stay tuned. The FNO show comes up next.